Hi guys, welcome back to the channel. Welcome back to another ICP Internet Protocol technical analysis video, and we're going to be sharing my short, medium and long-term price expectations for ICP. As I get into today's video, if you do find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, go ahead and subscribe, tap the bell, select all the notifications, and you will not miss another update. Let's jump right down into today's video. So we're going to kick things off right here with ICP paired up with USDT on the one-day Binance chart. We have seen a bit of a sell-off for ICP since we completed our fifth wave move on the 22nd of July. This move to the downside after yesterday's volatility equals 23.86%. Here was the range that we were talking about in the previous ICP video. We're talking about the price action potentially coming down to that $8.26.5 to $8.58.3, and that's exactly where that wick went, with its low coming in at $8.36.5. So the question is the worst now over, and can we expect a relief rally, or should we expect more volatility and potentially more moves to the downside? Well, it's not clean cut just yet. It does look like we have kind of potentially finished our move here, but it's also showing us with that last little drop potentially still on the cards, basically indicating that we might see a little bit more to the downside before we get into that kind of breakout situation. Now, for the most part, we found great support on the 50 SMA on the daily time frame. That is the yellow line coming through here, but resistance is now there on the 50 EMA, which is coming in at the point of recording today's video at $9.33.8. That is our resistance. This used to be support. It was support on the 25th of July. It was support on the 27th of July, but then we lost it. We closed lower than that 50 EMA on the 28th. We then kind of tried to get a rally, but we failed on the 29th. We tried again on the 31st, but unfortunately no closed positions above the 50 EMA. And as such, we can see here we've kind of taken a bit of a tumble to the downside. The good news is the 50 SMA is holding our support at the moment, right inside this previous area of resistance. This is what we were talking about before. Ultimately, this range right in here coming in at $8.38 to $8.76.9. This was previous resistance. We've come down and we've retested it. It is now our support range, but there's no guarantee that it holds. But it is looking okay at the moment. If I bring this down to a 4-hour time frame, and the reason for this is I want to scrutinize the structural points that we see here. Okay, we have had this bit of a sell-off. We've had this move, this one, and then here. Okay, now why am I a little bit nervous about this? Well, to me, it looks like a W, X, Y, X, and Z pattern, at least the potential for it. But it is still, a little bit irregular, and we still can see a potential move here to the downside a little bit deeper. And I'm going to put a little yellow box on here just to give you that kind of idea as to kind of where it can go. We are talking the price being between $8.79 and $7.80. Let me actually recap that for you. $7.78 on the low and $8.79 on the higher side, if I can actually get those words out today. So you can kind of see the Z wave is quite broad. But my main concern here is that we don't really necessarily see the cleanest structural points to the downside. And what I mean by that is we might actually find ourselves with this final move coming in, taking us down into the deeper ranges here under that Z wave pattern. Okay, so that would actually be more like this, where we have a W, X, Y, X and Z, if I put the Y in the correct spot right here. Okay, and it'll look like this, and it's quite it's not an unusual pattern, it's just an unfortunate pattern for ICP and the W, X, Y, X, and Z structure. Basically, it's a triple zigzag. Anyone who knows what a zigzag is, basically a zigzag is an ABC structure, and basically what we're tracking here are 3 of those stacked all together. You can't have more than 3. 3 is the maximum, so you can have double zigzags and triple zigzags, so the W, X, Y, X, and Zs. You don't go any more than that. So if this does go down, as I fear, into that lower, deeper range, then we are going to be, in my opinion, on a really significant rebound to the upside afterwards. So I'm watching out to see whether or not we get confirmation of such a move for ICP. I'm going to go ahead and take this off the chart. I'm going to leave the yellow box on there and come up into our daily. Okay, so you can see that this this broader yellow target range on our daily time frame taps into that lower range that we were talking about in the previous video as well, $7.50 to $7.88.7. This is a previous area of support. If we do have to come down into those deeper ranges, which as I say is a possible scenario, then we are going to be looking for that lower range to come on in here for ICP. And that could be a huge opportunity to dollar cost average and build out those positions ahead of what happens next, because as I said earlier, right, 5-wave patterns and they form inside those zigzags, right? So here you'd have your A wave coming up. This W, X, Y, X, and Z pattern is going to be your B wave. You will then have that fantastic C wave. And again, like I say, a zigzag pattern can be a zigzag on its own, it can be a double, or it can be a triple. And sometimes they can even be starting off as a zigzag pattern in your mind, but actually morph into an impulsive breakout situation should we hit the 1.618 Fibonacci extension level, which is also a possibility to keep an eye on as well. So for ICP, we've got a lot to kind of look forward to. We are going to be looking for close positions above the 50 EMA to kind of confirm more of a breakout. Otherwise, we have to kind of expect a bit more moves, a bit more of the moves to the downside. If we take a look at it from a smart money concepts point of view, it's no coincidence that there's a fair value gap down here, right in that lower range of $7.50 as well. So we don't necessarily just look at it through a W, X, Y, X, and Z pattern. We also take a look at smart money concepts, and the fair value gap essentially shows where liquidity was missing in the price chart. That's this area right here. Basically, a load of buy orders came in, not enough sell pressure. Price moves up to find sell pressure and basically fulfill all those buy orders. That then creates this little fair value gap. That's what they call it, FVG. And this is essentially just showing you an area in price where liquidity was missing. Okay. The markets like to go back and put liquidity where liquidity was not. So this is kind of coming in together and saying, yeah, we are more than likely going to be tapping into this fair value gap. So I've got a couple of things there that are saying expect some more volatility for ICP. Now, if I bring up our kind of volume profiles, you can see here that volumes have been decreasing both on the upside, but also on this correction to the downside as well. So again, there's not a huge appetite to be kind of trading in ICP, both in the moves to the upside or the moves to the downside. If we take a look at the stochastic RSI, you can see that we're oversold on the daily time frame. That's great, but I still expect us to kind of move back down a little bit before we get into those lifts to the upside. The other time frames are still showing us with more volatility to be expected, along with Bitcoin and everything else. The market generally, I think, is still got a bit more to the downside before we start to get that kind of next big run up. So yeah, it's looking good. I do expect August to be a good month. Just take some time. It's going to be something that we need to be patient with, and we'll eventually get there. The RSI is also lower than the 50 level, currently at 47.5. No divergences noted with price action or anything like that, so we're not terribly too concerned, but it is in a bearish position at the minute, being lower than the 50 level. So to kind of recap this on the daily time frame, what do we see? Well, we can see that current price is lower than the 200-day EMA. So straight off the bat, we have to kind of consider that we are in a bearish pattern based on traditional ways of looking at the market, just the exponential moving average, the 200-day exponential moving average. When you're lower than that, you're bearish. When you're higher than that, you're bullish, right? And of course, we are looking at resistance on the 50 EMA as well, so not giving us any kind of confidence there. Elliott wave theory tells us that we have that potential move to the downside. Unless we can get a breakout from that structure, our Z wave can go down deeper, and we are looking at the potential lows towards $7.50, which happens to be a fair value gap as well. Expect volatility. The stochastic RSIs are showing that the momentum isn't there to support a rally just yet. So ultimately, it's not looking like there's huge opportunities to go long, but potentially a little bit more of an opportunity to dollar cost average and build out those positions before we get into those next runs to the upside, where we do see those break situations. From our weekly time frame, as we start thinking about the bigger picture here, we can really start to take into consideration just how well this could potentially go in the future, which we start taking a look at all of these kind of patterns and things that we kind of have mapped out on the chart. And I've just moved that scale just to kind of take into consideration some of those most recent price moves. And I'm just going to go and adjust this so that we get that nice kind of understanding as to kind of where things can be going. I'm going to go ahead and bring this in on here, and then I'm going to go ahead and just recap and repurpose some of of these into these additional ranges of expectation, I think it's worth kind of noting on our bigger macro time frame. Okay, so on our weekly time frame, there's two key areas that I'm looking at here for ICP. Okay, we can see this previous one down here, the 0.618 to the 786. This is an area of previous resistance, previous support that was turned to resistance. And you can see the resistance coming in here on this 0.618 as well. Okay, that is coming in at $19.71. That area between 1971 and 2754 is the first area of resistance. We kind of already tapped into that in March this year. So this doesn't look like it's going to hold out terribly too much more. We're probably going to rally on up higher, where I do target out that 1 to 1.236 at $42.17 to $67.46, which also happens to coincide with a previous area of support that I think would turn into resistance. So for ICP on a macro time frame, we are looking for some pretty decent gains, specifically if you are able to accumulate back in September of 2023, I'll be looking for this run to the upside more towards the $42 to $67 for ICP. So that from our lows of September up towards here is going to be around 13 to 14,000, 1,400, up to about 2,200%. It's going to be some pretty significant gains. Obviously not necessarily the best in the space, but still pretty lucrative if you are looking at ICP as a speculative investment choice. But of course, I am no financial advisor. I cannot give you financial advice. All I can do is share my thoughts and opinions in the data in the charts as I personally see it. If you found today's video useful and informative, smash that like button. If you're new to the channel, subscribe. And if you haven't done so yet, guys, go ahead and check out my technical analysis channel where I cover a lot more TA on a daily basis.